I hope the high success rate from the previous video proves one important thing. I'm not trying to predict the future, I'm reacting to the options market. I base my decisions on options data and act when price start moving toward major call and put walls. From that point, price often become magnetized. That gives me a very clear directional bias. At the beginning of this video, we review the analysis from the previous one and look at exactly how price behaved, asset by asset, and how it moved precisely to the levels I outlined. In the second part, I'll break down new option-based analysis from the upcoming trading week. Stay until the end to hear what I think the market is setting up for this week. So last week played out pretty much exactly as I analyzed. Because I was prepared for both the bullish and bearish scenario, I was able to profit on both sides. In the previous video, I analyzed three stocks for a bullish setup: Boeing, ASML, and Tesla. Boeing broke above the major core wall at 240 strike and accelerated toward the 248 area, which caused the 240 calls to explode by hundreds of percent. ASML was another clean example. Once it broke above the 1100 core wall, it entered positive gamma territory and continued higher, eventually pushing through the next core wall at 1300 exactly as discussed. If you haven't watched the previous video, I highly recommend doing so to see how I reached those conclusions using options data. The third stock, Tesla, was analyzed for both directions. On the bullish side, we focus on the core wall at 450. Tesla briefly pushed a few dollars above it, then sharply reversed, executing the bearish scenario and dropping toward the 440 and 435 strikes, where the major put walls were sitting. I also pointed out the massive put wall at 400 and clearly stated that I did not expect price to reach that level during monthly expiration week. Another clean home run from E.L.I trading strategies. Alright, enough patting myself on the back. We have a new trading week ahead, and it's just as critical as the previous one. Let's start with the broader market, the S&P 500, and the options data for the upcoming week. Monday is a market holiday for Martin Luther King Day, which means we're trading shortened 4-day week. That usually makes the options market more attractive and often more volatile. Looking at SPY options, we can clearly see two major put walls sitting at 683 and 680 strikes. I'm focusing on the put side here for a reason. The index showed signs of exhaustion last week, and every attempt to break above the 700 level was met with strong selling pressure. When we are that close to a major psychological level, I would normally expect aggressive buying, but instead, SPY showed weak and sluggish price action. Yes, futures briefly tagged 7,000, but SPY itself didn't get there and struggled even to approach it. So my initial bias for the upcoming week leans bearish, but, and this is a very important but, the second mouse get the cheese. Don't be the first mouse and walk straight into the trap. Let the market show its hand at the open, then react. For a bearish scenario, I scan several stocks. If the market opens with a gap down or shows strong selling early in the session, the first stock on my watch list is Google. Now, some of you may say Google is fundamentally strong company, and you'll be right, but I don't use fundamentals. I trade strictly based on technicals and options data. So what caught my attention in Google? Looking at next week's options, I see the same core walls that were present last week, and price failed to break them. If the market finds strength, I'm open to changing my view, and we could absolutely move toward the core walls at 345 and 350 strikes. However, when I look at the January 6 expiration, there's a very large put wall sitting at 310, and that magnet cannot be ignored. Once again, I'm waiting for the market weakness combined with a pullback in Google before acting. And don't worry, bulls, I'm not leaving you without a bullish setup. The stock that caught my eye already last week is Netflix. The company report earnings this week, and sharp eyes will notice that for 3 consecutive days, price hasn't failed to break below 88. Is this accumulation ahead of earning next Tuesday after the close? Very possible. But as always, let's see what the options market is suggesting. Calls, calls, and more calls. at 92 and 93, with the largest core wall sitting at 95 and 100. Can the stock drop after earning? Absolutely. But the options market is clearly hinting at upside potential. And just as easily, we could see a 10% move toward the 100 level or even a push above it. So that's my analysis for the short-term trading week ahead. And as always, remember, the second mouse get the cheese. Let the first mouse get caught in the trap. If you found value in this video, I'd appreciate a like and a subscription. It really helps with the YouTube algorithm. I'm Roy, and as always, wishing you all a green trading week.